So if you were watching NIO stock today, you probably saw it have a pretty volatile day. And if you're wondering what on earth happened and why it dropped so hard, you're in the right place. We are going to break down exactly what went on, from some confusing delivery numbers to the very powerful forces betting against the stock.
All right, so here's how we're going to tackle this. First, we'll look at that immediate pressure the stock was under the second the market opened. Then we'll get into the delivery numbers, which is a really interesting story. After that, we'll dive into the world of short sellers and this idea of manipulation. And finally, we'll wrap up with what you should be watching for now.
Okay, let's get right into it. Section 1, a stock under pressure. So, what happened right at the opening bell?
Yeah, right out of the gate, the stock just plummeted. We're talking 3.8% down instantly. This wasn't a gradual slide, it was a cliff dive that set a really negative tone for the whole day.
And that's not just me being dramatic. The analysis we're looking at literally described it as the stock went down like a rock. That phrasing tells you everything. This wasn't a slow trickle of selling. This was a massive, coordinated push from the very start.
So you have to be asking, what caused that kind of sell-off? Well, that brings us to Section 2, and it's all about the delivery numbers. This is where the story gets really interesting, because you've got two completely different ways to look at the data.
Okay, so check this out. On one hand, you have this absolutely fantastic year-over-year growth of over 96%. I mean, that's huge. But, and this is the big but, deliveries were actually down compared to the month before. So it's like good news and bad news all wrapped up in one report.
So, with two competing narratives, which one did the market run with? Well, it seems the bears and the short sellers grabbed onto that one negative data point, the month-over-month decline, and just ran with it. They basically used it to build their entire case, completely ignoring that amazing yearly growth.
And if we dig in a little bit, you can see just how much hangs on one specific model. The ES8 made up almost 2/3 of all deliveries in January. That puts a ton of pressure on a single product to keep performing, right?
But hold on, this wasn't just about delivery numbers. There's another huge piece to this puzzle. And that brings us to Section 3, the shorts and manipulation.
And the source we're looking at here really doesn't mince words. They come right out and say a lot of that is just typical manipulation. The suggestion is that this sharp drop wasn't entirely natural, that it was, let's say, helped along by some very big players.
So how does something like that even work? Well, according to the analysis, it's a pretty standard playbook. Step 1, you wait for the market to open. Step 2, you load up on what are called puts. Those are basically bets that the stock's price is going to fall. And then step 3, the big one, you use aggressive short selling to actually force the price down and make sure those bets pay off.
And we're not talking about a small amount of pressure here. At its peak during the day, an extra 6.7 million shares were sold short against NIO. That is just an absolutely massive wall of selling pressure to overcome.
The options market tells a pretty similar story. Now you can see here there were a lot more calls, people betting the price would go up, but look at the puts, almost 1 million of them. And get this, a stunning 48% of all the options activity was bearish. That's a huge red flag for negative sentiment, especially right at the market open. So where does a lot of this high-stakes action happen? Well, it often takes place in what's called a dark pool. Now, that sounds kind of sinister, right? But really, it's just a private exchange for big institutional investors. The key thing to understand is that it allows them to make these huge trades without anyone in the public market seeing them until after they're done. It creates a pretty uneven playing field. Okay, so after all of that, after the sell-off, the delivery numbers, the short sellers, where does that leave NIO's stock right now? That's what we're going to cover in our final section, What to Watch Now.
All right, let's talk brass tacks. These are the numbers you really want to keep an eye on right now. This stock is hanging on just above a key support level at $4.48. It is absolutely critical for the stock to close above that level today. If it can hold on, then the next target to watch for is that resistance level up at $4.59.
But, it's never just about the numbers on a chart. The overall mood is a huge factor here. Right now, sentiment is poor. You see a lot of negative chatter online. And maybe most importantly, the big institutional money isn't jumping in to buy the dip. And there might be a bigger reason for that. The source suggests that Wall Street, in general, just isn't a huge fan of ADRs, which is how many international companies, like NIO, trade on U.S. exchanges.
So this really leaves us with the one big central question. On one side, you have a company that's showing impressive growth and making real operational progress. On the other, you have intense, heavy market pressure fueled by short sellers and negative sentiment. It's a classic tug-of-war. The big question is, which of these two powerful forces is going to win out in the end?